Good morning, everybody. It is now the week of September 21st, 2015. We have gotten past the Federal Reserve meeting and interest rate decision. And as you probably already know, the Fed has decided not to raise rates. They will keep rates at Fed funds rates at near 0 to 0.25%. The market responded negatively, likely on fears that global economic concerns were bigger than previously thought. The Federal Reserve is in an interesting position right now because the United States economy is really strengthening at a faster pace than the rest of the world's. And so the question becomes, do you want the U.S. dollar to appreciate more noticeably than not? And if it does, it has consequences. It has consequences on exporters, especially global economies based in the United States. So you definitely want to be cognizant of all the different things before making a decision. Now, the S&P 500 last week had early gains, gave them all back on Friday. And I wanted to show something that I've been talking about for a couple of weeks, and that's share volume. I have an opinion that share volume and volatility have a relationship, not a one-to-one direct relationship, but a relationship. On Friday, we saw the second highest trade volume day in 2015 and the fourth highest in the past 52 weeks. And our averages over the past month are still up around 4.2 billion shares per day when, I like them to be down around this 3.6 billion share mark. It provides me the assurance that the markets are calmer. It's an alternative way of looking at the VIX. And so with that being said, I'm going to show you an ETF that I have a position in and show you what happened to it on Friday with that high volume day. I have a position in the ProShares Short VIX. It's a shorting of volatility, and it's a short-term short, so it's very current, very volatile. And as you can see, this was priced at over $90 a share prior to the big market sell-off. And I took positions in this. The highest position I took was at 51. The lowest was at 44, and I took several positions in it between 44 and 46. So it had a nice run up last week, and as you could see, the Fed meeting really put a damper on that. And so essentially, I do believe I'm still bullish on this. I'm still holding this. I'm holding this a little longer than I had hoped, but I'm looking down the road, and what I'm seeing is I'm not seeing a lot of catalysts over the next almost 2 weeks, the next 9 trading days. We have very few earnings. Lennar reported good earnings this morning. That leaves 19 companies in the S&P 500 left to report earnings for the quarter. So we have a light earnings release schedule. The next thing that's really going to be on tap, and I'm not 100% sure as the date of this, but it's either October 2nd or October 9th. The September employment report is going to come out, and I believe it's going to be stronger than the August report, and I believe that we're going to see good upward revisions in both July and August. And that's going to put an interesting, I think it's going to be good for the stock market, but the Fed has to come back into focus again, because if they let all of the slack in the labor markets go away and we become a fully employed economy, there is no doubt that wages will rise, and as a result, prices will rise. And do you really want to be sitting at 0 interest rates when that happens? So I think the Fed comes back into focus again for October, and based on how this performs, I will decide how involved I want to be in the stock market come second, third week of October, because at that same time, we begin to report third quarter earnings. and it'll start with Alcoa probably either around that October 9th date or the week after. And then we'll see several big banks report, Bank of America, Citi, etc. And those earnings will be interesting because they did take hits due to volatility. So those are some of the things that are on my mind this week. I hope you have a great week ahead and happy trading.